Thanks for stopping by, guys. My name is Jeff, and in today's video, we are going to initiate coverage on General Electric stock, ticker symbol GE. They trade on the New York Stock Exchange, and their current price is $7.15. If you're new to the channel, go ahead and hit the subscribe button, guys, so you don't miss any content and future update videos. And please drop a like on this video, guys, if you find it useful and you enjoy watching it. So I don't really even know where to start with General Electric, guys, so I figured I would just pull up the chart first and we will kind of go from there and unravel it as we go. But this chart right here, guys, like I said, in 2 years, let's take January 3rd of 2017, General Electric was trading around $30.53. And I want to say that the dividend yield was paying somewhere around 3 or 4% back then. So right here I have January 2nd of 2018, guys, and so in 12 months it lost nearly half of its value. And then from January of 2018 till now, guys, it has just gotten much worse. Now trading around $7.15 and has actually hit a low in the $6 range. And this really only tells half of the story, okay? So General Electric has never been a huge growth company, guys. Most people have always invested in it because it has been a dividend aristocrat. You know, over the last 10 to 20 years, General Electric has been very reliable with a dividend. And now look, guys, the yearly dividend payment is 4 cents, okay? So you will get 1 cent per share payment every quarter. In my opinion, you know, like I said, this is just me talking, but it's not even worth paying a dividend anymore. They might as well just completely cut it out and try to refocus some money into rebuilding the business. But, you know, 1 penny every quarter is just not enough of a dividend payment to keep me interested. Now, most all companies I look at fundamentally, guys, there's always specific things I'm looking for and specific things I don't want to see fundamentally. Now, I do want to point out, you will see some good fundamental numbers in here, guys. Like I said, this kind of tells the tale of why PE ratios and things like that don't always tell the story of a company. You don't ever want to base an investment, you know, solely on PE ratios. They have about a $62.19 billion market cap. Like I said, that's dropping every day, but the enterprise value is $182 billion. And I think right there is a pretty fair representation of just what exactly is going on, guys. Their enterprise value, or what they're supposed to be valued at, is almost $200 billion, but they only have a $62 billion market cap. Like I said, this is a company that has just got involved with too many things and ended up doing most of them wrong. They do have an attractive forward PE at 8.41. We'll jump over here, guys, the 52-week change. Like I said, we just seen that on the chart. They're down 57% over the past year. This stock would have been a great short, really going back 2 years. Now, I wish there was actually some good news to tell you from here, guys, but there just really isn't. You know, their profit margin is a minus 25%. Operating margin is a minus 1.86%. They're negative 0.41% on assets, and they're minus 41% return on equities. Okay, so let's just stop right there and talk for a moment. Okay, no good company, no profitable company, and no company that's going to push forward into the future can operate at these kind of levels. Okay, it is impossible. They're negative in everything. They're paying out more money to stay functional than, like I said, if they were to shut down. I think that is why there is a real risk of bankruptcy here, guys. There's only so long that you can run negatively before it all catches up with you and you no longer have a business to run. The short percent afloat is around 1.5%, and the short percent of shares outstanding is around 1.55%. Now, let me explain that, guys. Most of the shorts have covered on GE. GE has been so heavily shorted. I can remember in early 2017, short interest jumped up to about 20 to 25%. So most of the short sellers, including myself, you know, have already covered on this position, and honestly, I would be kind of scared to short it at these levels. If I seen it spike up maybe to $8 or $9, I might hit it with a short. but at these current levels, I feel like the market cap has been depleted so much, I'm probably just going to completely stay away from General Electric. Now, we just talked about the profit margins and, the return on equity, return on assets. Now, there is a solution to that, okay? There is a solution to that, and the solution to that, guys, like I said, you will see this with a lot of marijuana companies and a lot of startup companies, but quarterly revenue growth and quarterly earnings growth can kind of answer some of those questions. So you can invest into a company that might not necessarily be profitable in the moment, but if they have massive quarterly revenue growth and earnings growth, you might look at that company and consider it very investable. Well, GE also doesn't have that, okay? They're operating at a negative 3.6 quarterly revenue growth, and they don't even have a registered quarterly earnings growth. And I have cross-referenced this on a couple of different websites, guys, and have come up with the same exact result. There is just simply not a quarterly earnings growth to really calculate here. Then, of course, we just talked about the dividend. The forward dividend yield is 0.52%. Like I said, it's 4 cents per year, which is 1 cent per quarter. Again, I don't even think that's worth paying anymore. If I was GE, I would just eliminate the dividend and, like I said, try to focus that money on salvaging, what a disaster this company has become. So now really prepare yourself for this, guys. This is the balance sheet. This is not for the weak of stomach to look at right here. They have $13.48 billion of cash, and they have $114.96 billion of total debt. Like I said, with a failing company with no quarterly revenue growth. If I was an employee at GE, I would probably just quit and start over somewhere else. I wouldn't even want to be working for a company that is in this kind of shape right now. So now let's take in a few articles about GE, guys. This one goes back to October 1st when GE shares soared after company suddenly dumped John Flannery as CEO, okay? I kind of want to use this as a more relevant, maybe timeline, just so we can kind of track pricing and see what goes on here. So General Electric abruptly removed John Flannery as chairman and CEO and installs former Danaher CEO Lawrence Culp as his successor. The board has grown frustrated with the slow pace of change under Flannery, sources familiar with the issue say. GE will also take a $23 billion non-cash charge for its struggling power business. The company says it expects to fall short of previously indicated guidance for free cash flow and EPS for 2018. Now, ironically enough, guys, when this news came out, shares jumped 7.1%. So right after they said that guidance and revenue was going to be short for the total year of 2018, somehow, some way, shares started going up. And I don't really understand that. I guess when they change CEOs, some people seen that as an optimistic move. I remember reading this article back in October, and I could not process why the shares were going up when they basically told them revenues and EPS would be lower than guidance for the remainder of 2018. Then once again on the 13th of December, guys, General Electric shares surge after rare JP Morgan upgrade. So Steven Tusa is an analyst at JP Morgan Chase, guys, and he lifted his rating to neutral from underweight, and he maintained an $8 price target on the stock. So once again, guys, this upgrade does not really reward the stock much at all. $8 is not much of a price up from where it currently sits. And once again, I was just more confused as why the shares were running up. I guess it would be more day traders trying to get, a fractional percent of a stock, just to make a quick buck. Me, on the other hand, I started shorting it every time General Electric runs up on some news like this. JP Morgan Chase is my favorite bank, but I don't trust, every analyst rating that they put out. This is also very interesting too, guys, because GE is looking to unload its business that makes light bulbs, okay? It's a product that perhaps more than any other really symbolizes the company's history of innovation. Now check this out. Light bulb sales soared between 2007 and 2014, thanks to the LED lighting that GE helped to invent. However, the problem is that LED bulbs last for decades, so sales have tumbled. So this is a very ironic and strange case where perhaps some of their products are so good that they're kind of putting themselves out of business. And guys, I don't want it to seem like I'm just unfairly beating up on this poor company. As you can see, this is kind of their business model right here. So they're involved in capital, power, renewable energy, oil and gas, energy management, aviation, healthcare, transportation, appliances and lighting. You know, unfortunately, what I think the deal with GE, guys, is they've gotten so involved and gotten so diverse. They've gotten overly diverse, and they really have failed to do maybe one or two things right. And at the end of the day, I can't really find any bullish sentiment in this company. I don't really know what is going on here. And that's the biggest problem that I have. I have followed this stock for many years. I have watched it very closely. And the problem I keep running into is just this vague uncertainty of what exactly are they doing? What is the focus? What do I have as an investor to really look at and invest my money in and feel somewhat safe about? Because just about every business venture they try might succeed for a while, ends up failing, or it almost immediately fails. It just shows in the stock price. And unfortunately, especially for these newer CEOs, there's not really an opportunity to change the culture of this company. It would be very, very difficult to angle it all down and become very focused again, because GE has got such a reputation for this broad diversity. So in my opinion, guys, this is just me, like I said, trying to give you the best possible advice and the best possible answer, you know, I can give you on a YouTube video. But I would just stay away from GE. You know, even with the upgrade from JP Morgan Chase, nothing in that article did they say, you know, that sales were going up, that profits were going up, revenues going up, expect an EPS raise. You know, nothing like that. They just simply put it in a neutral rating. In anything that has a neutral rating, you know, it's got to kind of tell you exactly what the word is. It's neutral. And if you want to go by charting and you want to go by fundamentals, you know, it all tells you that the company is going down. Me personally, I've shorted GE many times, but I'm almost getting to the point now where I think maybe it is oversold and it could see a reversal. But that's not a risk I'm willing to take. If you look around, you know, pretty much every stock, you know, on the market right now is on sale, and I can find a lot better places to put my money than General Electric. But anyways, guys, thanks for watching the video. I hope you found it useful. Leave me some comments. Tell me what you think about GE. Drop me a like. I would really appreciate that, guys, and have a great day.